A chat, a very interesting one we lined up for you with the Ashwani Kumar, MD and CEO of UCO Bank, now joining us. Pull up the chart of UCO Bank today as well as the last 10-day, 15-day. You would see there's marked interest of the market coming in. Today itself, UCO Bank is gaining 7%. And that is because the street believes that one side, the performance of mid-sized public sector banks very good, and there's no stopping there. The valuations after the correction had become very compelling, and hence street is flocking back to the name. But we'll focus on the fundamentals with Mr. Kumar. Thank you very much for joining us this afternoon. I want to understand with you, sir, that there is a section of the market which believes that last few quarters of credit growth have been very strong. From here on the one hand, yes, there is festive season where credit generally perks up, but the trend would be kind of smoothening out. Is that a trend you see developing, or you see good growth on credit side at least for next 4 to 6 quarters from current levels as well?
Thank you for having me on the show. First of all, I'll just give you a brief data point. If you look at the current way the inflation data has come, inflation is coming down. You look at GDP numbers, they are growing. You look at our PMI, even services, even manufacturing, that is in expansion mode. You look at e-way bill, all high frequency indicators, they are showing a good indicator of growth. Our consumption story is good. So I believe that based on these numbers going ahead, the credit growth will continue to have a good momentum as we go ahead in this financial year. And going forward also, the way the government is supporting growth, the government is coming out with so many projects in the infrastructure story. So the credit growth will continue to be good in the coming months as well and coming years as well.
Your point taken that the credit growth outlook is quite strong for the coming months as well as longer term as well. But talk to me about the return on asset ratio trend as well. It's been very volatile of late. When do you expect yourself to breach that 1% mark? Is there any internal target that you're working with?
See, if I talk about UCO Bank, currently we are working in a very strong way for a growth in our operating profit. So our target is to grow operating profit by 15% during this financial year and on a year-on-year basis. And profitability, profit after tax, as you all know, is a play of provisions. And going forward, looking at the PCR, we are having around 94-95% PCR, and our net NPA is already 1.19. And the provisioning requirements on a quarter-on-quarter basis and on year-on basis will come down. Our gross NPA is also coming down. It has come down to 4.48% this quarter, and we'll continue to see the declining trend in the remaining quarters as well. And with all this in place, the ROA will improve in the coming quarters. But as far as the quarter or the year, the number which you have specified, that internally we have not kept any target. Our target is to improve our operating performance on a quarter-on-quarter basis.
Mr. Kumar, so what is the aspirational ROA level? If I ask you to look beyond the 1 or 2 quarters, because that sometimes becomes very tricky to answer. In next 12 to 14 months, where would you like to see your ROAs and your steps actually in that longer direction you want to fall there rather than quarter to quarter kind of holding on to?
See, again, I will just reiterate that our focus is on bringing operational efficiency in the system, because if you look at our cost to income ratio, that is also quite high as compared to other banks. We are working to reduce that cost to income ratio also. But given that we are planning to spend on technology on a very high basis, and cost to income ratio will continue to remain little elevated. But the focus again may not be this year, but maybe by next year will be touching or will be coming to the expectation of the street by clocking that ROA in the next year.
Sure. Actually, let's talk about the asset quality as well, because looking at your NPA, that ratio has come down from 2.5% all the way to just 1.2%. Even the gross NPA from 7.5% is down to 4.5% thereabouts. What are the targets here? Do you see more room for improvement in your asset quality?
The asset quality gross NPA level, our target for this year is to bring it to less than 4, maybe 3.75 by the year end. And in net NPA, our target will be less than 1. So sub 1 basis will bring it maybe 90 odd basis for after this financial year, 31st March 24. That is internal target, keeping in view the way the recovery team, the way our monitoring team is performing, and internally we have kept a target that our recovery should be more than our slippages. So banking on that, I am quite hopeful that our net NPA will be less than 1 and our gross NPA will be less than 4 by the year end.
Because your current net NPA is 1.18, closer to 1.2, and GNPA at 4.48. So you're talking about 50-60 point reduction and improvement on GNPA, almost 20 to 30 basis point in the next 2 quarters on net NPA. How is the visibility looking on your some of the recovery end? Are you looking at some write backs in the next few quarters via recoveries?
Yeah, we have a PCR of 95%. So the recoveries are coming from the NPA accounts, and those accounts are mostly doubtful category or loss category or doubtful 2 category, where the provision coverage is very high, and there is always a position of write back on those accounts. And we have a TW portfolio also, but in TW portfolio there is a challenge that we don't have large accounts in TW portfolio which are likely to come or which will be resolved in this quarter. We can expect some one of the large TW account to be resolved in the next quarter, and through that we can expect some good handsome amount in TW recovery also in the next quarter. But this quarter our focus is on recovery upgradation, and the right back through recovery will be reasonably good, because 95% is already provided for.
So recoveries, opportunities there as well. But, the new trend per se, which the industry is looking at tapping, is digitization as well. And that's what we are seeing a lot of fintechs and other micro lenders also actually tapping into. What are you doing in terms of increasing your digital presence? And also with respect to funding this growth, would you have to raise any funds soon, or you're well capitalized?
See, I'll answer in 2 parts. First is your digital. First and foremost, I am happy to share that bank has already started working on the digital front. First thing which we introduced in this quarter is the digital onboarding or the customer acquisition through digital mode. We have started tab banking. Pilot has been successful in 10 branches. Now by 30th September, we plan to roll out in 1,000 branches. So through tab banking, we can reach out to the customer's place where they can open accounts, they can open RD accounts, they can checkbook request, they can open go for the internet banking request, and everything can be open FDR digitally. All these things will be available through tab banking to 1,000 branches. And our second phase of the digital tab banking is that we will capture all their loan leads also, request also digitally at their customer's place. So that is the second phase. Third thing which we are now taking to the board in the next board for the digital transformation of the digital lending journeys also. So for that we are taking to the board digital for onboarding digital partner by way of a knowledge partner. We will be going to RFP maybe this quarter end itself, or maybe next October 1st week or 2nd week after the board approves that. So that with that we'll be bringing all our digital journeys on our mobile app. And currently we have already on 6 journeys on the mobile app, and we will be revamping, bringing all our retail journeys, all our MSME suits on the mobile app in next 1 year. By end of next year, I believe that our entire digital transformation will be through by onboarding digital platform. And one more thing we have already started. We have started a change management in our branches through our network. We have identified digital champions at branches. We have identified digital spoke at zonal offices. First, we are going for the change management for the digital in 3 phases. One, for our staff, frontline staff, that is our branch heads, and then second line, our assistant branch managers, and then to the branch staff. So this is a 3-way change management. We will be sharing our digital footprints available to our staff first, because staff are our brand ambassador for change management, and they will take it to our customers.
Mr. Kumar,
So
very
our
quickly,
intent, yeah, please.
running short of time, Mr. Kumar, lots to ask. I want to understand how much of your loan book is coming directly by direct lending, and how much do you have any co-lending tie-ups with some of the NBFCs? Is that a model you will prefer from here on?
See, co-lending tie-up we have already done with 4-5 NBFCs, and we have already reached a portfolio of approximately 5,000 crore through co-lending, and we'll continue to work on the co-lending front with entering into various partnerships with many of the NBFCs. So that is one space we are working, and we are also working on partnership on the gold loan portfolio also. So even we are expanding our gold loan portfolio in the south, in the north, in the east, and we have started working on that. Currently our gold loan portfolio is not huge, so we have initially given us a target of at least 100% growth in this financial year, and then from next financial year we'll be looking at exponential growth by bringing all infrastructure at our branches.
All right, Mr. Kumar, thank you very much for joining us. That was Mr. Ashwani Kumar of UCO Bank talk about their business.